Nasdaq results out this morning's earnings growing 19% to 88 cents per share. Congratulations. 2 cents better than estimates on revenue of $1.3 billion, just ahead of expectations. Company saying that market volatility from macroeconomic and trade policy uncertainty boosting trading volumes. And joining us right now to weigh in on all of the Q3 results, plus the market landscape, the IPO pipeline, and so much more. Nasdaq CEO and Chair Adena Friedman is here. Good morning to you.
It's great to be here.
Double digits.
We're very happy about it.
Double digits. So what's going on? Where does this go from here at this point? And these numbers are pretty great. And so the question is, can you keep going at this pace?
Yeah, well, we feel great about the results. So we had 11% revenue growth for the quarter, and then we have a 3 and 3/13. So we've reached $3 billion in our annualized recurring revenue, which is a 9% growth, and that's the third quarter in a row that we've been able to demonstrate that 9% growth, talking about sustainability. And then 3/13. So in our market modernization program, in terms of our markets, we had 13% growth in our trading business, our markets business. In the innovation economy, supporting the innovation economy, we had 13% growth in our index business. And then in our fintech division, which really supports the trust in the financial system, we had 13% growth in our fintech division as well. So really, really proud of the broad-based growth we've delivered. Right. The way that we're engaged with our clients is spectacular. You know, there's a lot of demand for what we do, and there's a lot of trust that they have in us to be able to deliver for them.
So you moved actually to arguably more durable, these durable parts of the business that are less volatile based on what's going on in the market, but you did benefit from this market. So what do you think is happening in this market right now?
Yeah, so we have had very robust trading volumes in the markets. And when we look at the options business, we had 6 of the top 10 trading days ever in the options markets in the third quarter, with another new record in October. And then in the equities world, in the cash equities business, really strong volumes throughout the quarter. But now we're actually reaching a point where we're having an average of 20 billion shares traded a day in October. So it's a lot of volume. So what's really happening is, I think it's macroeconomic news that creates a lot of different investor sentiment. We've had about a 5-year increase in the amount of retail investment in the equities markets, which is a very sustainable trend. You also have the fact that you have this new technology called AI that's delivering a lot of promise and actually delivering a lot of growth. We looked at the Nasdaq 100 over since the beginning of 24, which is when really AI started really kind of coming into the earnings of these companies. Has the earnings of the Nasdaq 100 grown 32%? The index value has gone up to 47%. So you actually really are seeing that these companies are earning their returns. They're earning their valuations in that regard. So all of that, I think, is kind of combining to create a lot of interest in the markets and a lot of activity.
Is the options, these crazy day short term, is it all speculation and gambling?
What?
Or is that the incremental addition? I mean, what did you say? 6 out of the
6 out of the top 10. So we've actually been seeing overall in the options business over 100 million options traded within a day. So it's a lot.
And it used to be hedging. It used to be
there's a lot of hedging. I mean, I still think
is there a lot of gambling?
I think that it's both a combination. The options markets have actually always had a lot of retail and a lot of institutional interest. But the retail interest has definitely increased over the last 5 years. But institutional interest as well. I mean, short-dated options really are about being able to make decisions and kind of change your opinion. The macroeconomic environment has been delivered a lot of mixed data. It's changed. There's a lot of changes that happen from day to day in the world. And I think the options markets are a great way to be able to reflect your views on those changes, both at a macro level and a micro level.
We're not allowed, I don't think.
Talking about measuring
That's all I
views.
need. DraftKings.
I was curious what your reaction was. A week ago, guys, your competitor of sorts, ICE, took a stake in Polymarket. And I'm curious what you think of that whole space, given what you do.
Yeah, well, prediction markets are interesting. I mean, I focus on the prediction markets as it pertains to financial assets. There's a lot of other predictions happening out in the prediction markets, but when you look at the financial assets, do you want to have a binary way of thinking about it, almost like a yes/no decision on what the future value of a stock would be or the future value of an index would be? I think there is actually a real market for that. But you can do that in a regulated market. So would binary options be something that we would want to offer our investors? That is something that we'd be interested in.
But is that something you would go out and acquire and take a piece of Kalshi or somebody else, or would you go and do it yourself?
I mean, when it comes to financial assets, I feel like we have an opportunity and a right to win in terms of being able to offer those types of solutions in the markets that we operate. And then we would look, I think that overall the prediction space is interesting, but right now, we like to operate in regulated businesses. Right. We think that our regulated markets provide the proper investor protection, that we actually have the guardrails to understand how to operate them. And we can do these types of assets. We can make these assets available in the regulated.
That's interesting, though. You don't feel as comfortable with the other stuff that reaches outside the regulated markets?
Yeah, we've had a lot of experience over the years in understanding how to operate markets, both in the regulated space and unregulated space. And our view is that regulation has a reason. There's a reason for regulation. It gives you the right guardrails, the rules to be able to trade in. And I think we have a real right to win in those regulated markets. As the SEC and the CFTC start to think about bringing more asset classes into a regulatory regime that we can understand and that investors can understand, and they're putting guardrails in place for investors, then it makes us more confident and comfortable that we can bring our great leading solutions to
so
those,
the prediction markets is just like for financial, so not the political end of things, because maybe you should be watching that, because if Mamdani wins, you might be moving this entire place to Texas. And I don't know, would we go? Are
Texas?
I mean, yeah, we have a lot of great states in the United States, so it's exciting.
She's already got operations in Texas.
That's what I mean.
But I am curious. So you think, all of the sort of betting or investing in, who's going to be the next mayor, or, where Taylor Swift and Travis are going to get married, which is also apparently you can bet on that.
Do you think that's reckless for the ICE for ICE to get involved?
I'm not going to speak on behalf of their decision. I can just say that prediction markets are an interesting space. What we focus on is what we think are real financial assets and how we can be a great market operator for financial assets. That's really our focus.